Short form video update, the crypto sniper. Yes, it is the 30th of December 2024. One more day for Old Year's Eve. Okay, following yesterday's video where we had cautioned about the 4 core technical reasons why Bitcoin could sell off. In this video, I'm going to assert that those patterns have now triggered. I'm going to show you a 5th one, and I'm going to give you an update on the possible effect that will have, not just on Bitcoin in terms of targets to the downside, but also XRP, which is a popular one that we've been engaged on to the upside very nicely, and explain why I've been in tether during this last 3 or 4 days as a result of events. Plus, we're going to look at Ethereum, which is the second biggest crypto, where it may go down to in a bearish environment. There will be a knock-on effect on alts, is our hypothesis. Why? Because Bitcoin is still one of the most significant tokens in the space, and if it is going down, unfortunately there's knock-on effects for the rest of crypto. So first of all, let's go to that chart and show you number 5 that I never gave you yesterday, which was the 5th technical reason as to why the Bitcoin could in fact be facing downside. This is it right here. I'm showing you the chart. We've gone to a monthly time frame. I have delogged the chart, so you are seeing it in the fullness of normal regular scale. Now, actually, when I took a picture of this earlier, it was almost a better example. It is known as a shooting star. Let's bring it up for you. Here it is. We took the picture over there. That is a shooting star. That is almost at the end of the month. When I took this picture this morning, it was, what time was it? It'll tell you there. It was 9:53 in the morning. We're now 5:30, 21 minutes past 5 today. And in actual fact, that red candle has gone further, and it's led to a triggering event on 4 patterns that I gave you yesterday. This is the 5th pattern. It's a shooting star. Simple single candle, although context matters, blow off high moves. So it must occur at a localized high. It's not got the same significance, for example, if that candle just showed up somewhere here, for example, or along the way somewhere here after a little bit of up, a little bit of down, or there, or anywhere here after a sell-off. It's after a high. So when it is in that position, or that position, it starts to be interesting. That, by the way, was not a shooting star. It's more of a hammer. That might have almost been one. The body got a bit bigger. Not as nice enough wick to the upside and somewhat of a wick to the downside. This one had very low wick to the downside. In other words, you opened here after the big blow off. You traded higher, all green. During the course of the month, you reversed all that green. You went past your open and were, at the time I took this photo, closing. That was 9:53 this morning. I have all my charts are date stamped, by the way, and I am on UTC +2 time. You can always know. There is no after marketing with that. So that represents the shooting star. That is your 5th technical take that suggests that there is potential for downside. Got some plaudits and also some people that were quite grumpy with me. The typical arguments I hear is things like flip-flopping or oh, so you bearish now, various other comments. Here we are, we're presenting a technical take, and there are multiple time frames for existence. It's quite feasible for you to have the shooting star sell off to let's say the 80s, just below the 80s. Let's say you make a 79k target to get maybe a hammer, and then later on in the year trade to a new high. We're just telling you what we're seeing for the time frame that is currently in. Could there be downside? You might not want to ride that downside. Other people say you should just hodl. Oh, you're telling everybody to sell. We aren't telling anybody to do anything. We're non-advisory. There is no selling or buying. We're telling you what we feel or think is going to happen in the short near term, and we gave you 4, and I've topped it up with a 5th technical take today on what's happening to Bitcoin. So now let's go into the live markets and show you what's happening on a lower time frame. So we go back down to those live markets. Let's go to the hourly, I think we need, and show you that head and shoulder. In fact, it's probably 4 hourly. We can drop down later to the even lower time frames and put our eye back on. That shows you our jaws. So this is what we refer to as a triggering event. So yesterday we told you about a head and shoulders. Yesterday you were around about there. And you were fractalizing, as we often say, fractalizing, which is a lean, a smaller setup against a bigger setup. That is the basing ascending grind line of a macro bear flag, boom, 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 sell leg. We are suggesting you could get a secondary sell leg. We point out that you reverse on our splitter as half move. You reversed again on our splitter after a low volatility period, half move, bit of a broadening structure. It was ascending on a bear pole. That means we expect it to trade down. It traded down. It went super low volatility in a flag within a flag, expecting a trigger. Then it broke and went super low vol with a period of support at the level we chose and told you is a likely neckline for a head and shoulders. This chart has not been altered. Go and check the previous video. 93K you had for all of this morning, spinning tops in there. It's worth me taking you into a lower time frame to appreciate that. We also had a lot of people saying that's not a head and shoulders. We don't care for who Peter Brunt uses for his technical analysis, or anybody else that has their own criteria. We have HVF method based head and shoulder draws, which always involve a horizontal price-based neckline. And we expect the key level of significance to be just run by the armpits on the left shoulder and the right shoulder. You can learn a whole bunch more about the true theory, how price is more dominant than ascending upside necklines, descending necklines, and how projecting from varying angle lines absolutely destroys the true geometry that is generated in charts. Price is the first and primary indicator in technical analysis. Price-based charts are the best form of analysis. We spend no time utilizing MACDs, RSIs, other indicators, slowed up, lagging versions of the original price pushed through some mathematical formula. Why? Because it's ineffective. In other words, all your responses will be lagging. If you want to know things before everybody else, that's why we called the turn in the bond market 3 or 4 years before Paul Tudor Jones and Stanley Druckenmiller, and now Zero Hedge and everybody else is talking about it. That's why we called short on oil before the collapse happened when it was 67, saying it's going to potentially single digits. On balance of probabilities, it's never a guarantee. The possibility of that outcome is just a lot higher in this window space. Eventually that window space passes, something doesn't happen, it turns around and it recovers. This can happen to Bitcoin too. Just because you have a setup doesn't mean it's going to trigger. Now that you've triggered, you are in a higher possibility for making the target we suggested, 79. This is why I'm doing another video straight after the previous video, because once our community knew that we were bearish and had been bearish and we've been getting out, and we started to share publicly our takes on that, we put it out publicly to you on the YouTube. Now the triggering event has followed very shortly thereafter. This is a break. That means the potential to trade sub 80K is now open. By the way, the risk reward trade on that is 12.28. I am taking personally, I'm not suggesting others should, but I have taken a small technical short on a specific platform. Everything else is in stables for now. In short, I expect XRP, my core holding, to go down in value, and I'm going to show you what that possible target might be, and on Ethereum too. So here's where you're at. That would be a head and shoulder target. I want to highlight two things. Even if you get a head and shoulder, and even if it triggers, it still doesn't mean it's going to have to trade at 79. It just means that possibility stroke probability in terms of the needle of outcome has moved a little bit further in your favor. Also, on the Market Sniper, we have highlighted that there is real debt-based issues. This is further being brought into everybody's brain-seeded mind by the likes of elongated muskiness talking about America being bankrupt, and Trump talking about how kicking the ceiling, the debt ceiling, into the June of next year makes it a Republican issue when it's the Democrats that have screwed the economy up. In short, the red versus blue argument about the debt situation and potential bankruptcy is now being discussed by your future president, who's won the election, soon to be inaugurated, and his sidekick, dark state operative that is running around earning all the military industrial complex money for putting satellites in the sky to track and trace everybody in the world while promising you a home on Mars. That's where you're at, guys. Anyway, this triggering event is, it could see Bitcoin run only part the way. Suddenly new information, new momentum comes in, and it can turn and go back up. And it's not, oh, I promised you 79K. It just is what it is. It's a possibility that is increased in possibility. Can't give you a number on that. So by the way, the flag triggered that we highlighted, which was one of the 4 indicators before. In actual fact, you could have got in sooner. You could have had the stop over there. I waited for the neckline. I wanted to see if that fell, because Bitcoin, the bugger that he is, can get very weak and just suddenly out of the blue pump. And if it was getting support, I wanted to see this roll over before putting a small technical short trade on with a very tight stop. I know most of the guys that are long will want me to get wrecked. It's okay. I don't mind. I prefer just to, be engaged somewhat in the market. And if it looks like there's weakness, to benefit from it. At the moment, it's benefiting me quite a bit. This flag triggered there. That poll on the flag also has a target, and that was 83,451. So we have 2 targets essentially in the low 80s, essentially 80 and 83.5. Of course, that's a technical run of the 80 mark, which would involve a 70 coming in. So that Bitcoin flag is triggered. The Bitcoin head and shoulders is triggered. That's 2 of the patterns we gave you yesterday. And as we also highlighted, there is a broadening structure in Bitcoin, and that too, it has broken its basing ascending grind line. We drew that for you as well, and it went something like that in terms of the broadening structure. So that is also a break out of something that was showing grinding strength. One other point that I didn't make yesterday when telling you about the 4, I've added a 5th to it, is that the momentum to the swings have changed. The hardest moves are now to the downside. And the ups are a little bit less strong. Whilst here you had quite a strong up, here you had a really big up, but then it got slapped back, so it was counteracted, and now the slap back is even larger, and what you've had is you've kind of punched your way out on these rising wedges into the 108 high. So that is pointing to the buyers no longer having such strength, and a lack of bid ladder developing up behind the price. Everybody wants in, pays the 108. There's no one saying, you know what, I'll wait here at 100 and get it at 99,999 if it comes back. There's no one that said, I'll wait here at 86. It's gone too far for me, I think, and it's grinding. I'll wait at 86.6. Why? Because the market's dominated by retailers. It's dominated by someone like Michael Saylor, who wails in, often buying near highs, but often buying in every, lows as well. He's kind of random by entry. There aren't enough true technical analysts with real patience on the macro time frame. So with the absence of that bid ladder, when you get sold, you can skid through price levels quite quick because there's not that much that is built up in terms of ladder. More developed markets tend to have more of a bid and ask depth to them when big levels are being run. Anyway, so that's a triggering event on Bitcoin. I also mentioned to you that Ethereum and XRP will be covered. What are their potential downsides? Also remember, before I leave Bitcoin, not only is it not a guarantee that 79 gets made, but it's not a guarantee that it stops at 79. So a typical aspect of head and shoulder. We also highlighted this head and shoulder on a much smaller time frame when we were talking in our community. Yes, that's a head and shoulder. I should take you a whole bunch lower into the time frame to see it. But what you'll note is not only did that one's target get run, but it got overperformed too. We typically refer to this in our theory, HVF method theory, which you can come and get an introduction to in that small little enjoy our mini course below link. You can find out. We refer to that as a monarch head and shoulders. In short, it's the tiny one on top of the head inside a larger head and shoulders, for which, as I say, regardless what others will say, is what we've drawn here. If you don't accept it as a head and shoulders, we don't mind. We do, and we warn of it for those that are prepared to listen, and sometimes we trade them, as I'm currently doing. By the way, this is not a huge capitulation so far. It's thin markets, it's low engagement markets, but if something negative were to come up in between now and then, or the debt situation, check our the market sniper channel for everything we've been discussing on the debt situation and why, and that was why I was mentioning Trump and Musk, why potentially you could have a real bumpy ride as we head into the inauguration in terms of rollover in debt. 7 trillion has to be rolled over on top of all the new debt expenditure. America spends almost double what it gets in tax revenues, which is inflation. It goes straight into inflation. You make more than what you earn, you are diluting your currency in the long end. At the end of the day, you're dropping the value of that currency. Where's that money going? Don't worry. A lot of Ukrainian officials are now driving Rolls-Royce Spectres all over Monaco. You've been paying for that. Feel good. Anyway, I'll try not digress too much. Let's get on to the Ethereum and the XRP side. And you can have a look at that. Ethereum is currently triggering on an inverted HVF by our reckoning. In short, this is a downside move as well. And the target here, 2.911. It's not huge. You're at around 3,300, so 291. It's about $400 on 3,300 for a target. So it's about 12.5%, I would argue, to the downside. But again, being the first in a new trend, overperformance could be implied. This was your tap out highs on ETH at 4,100. That, by the way, presented a double top as well. You would look for the key level of significance in here, and I'm freestyling this because I'm just seeing this. I hadn't drawn it on the chart for this video, so let me just tell you exactly what you do. You find that line, you draw it, you make it in blue because that's our protocol, and you point out the key round number is 3,500, and that is essentially your neckline for this double top. Over here, you make sure that low did at least trade 3.5. It didn't quite make it. You see, it went 3.501. Now, I'm not allowed to do that. So I have to lift that number up a little bit, even though the 3,500 is the obvious round number. So I'm going to make it 3,550 instead, because it didn't truly, honestly trade that. It may have done on another platform, but that's not allowed. I want to just highlight something to you. You can see here how you got something that could have been a possible head and shoulder and failed. It wasn't perfect. I could move that neckline a little higher and it could have gone through there, and you got a right shoulder, or my apologies, yeah, that's your right shoulder in there, and you can see that suddenly you just pump. Crypto can do that. Not every 3 bumps does lead to a head and shoulder, but that did prove that that was a key level of support. We're going to call it the 3,550. You can then subsequently see here that you got this grinding up that we had in a channel. This is your M double top over here, came down, bounced there and bounced, as you can see over there, for there, and then it spilt to the downside. So what did you have? You had around 4,100 high there. You had your double top there. That is a key level of significance, and you can see when you rallied, you could run but not hold those key levels, touch but can't stay above. That's what we call iceberging through that. You get a wick only. Now this is a wind up structure that could take you further deeper to the downside as part of a reversing structure. Double top on Ethereum. Let's draw that target for you. We're going to do it freestyle with you. As I say, I'm almost missed that in the first look, and now I'm seeing it as I come to it. We take the highest point and we take the lowest point. That one is slightly lower. It is 4,046. Again, we can't do 40.50. It didn't trade there, so we'll go with a 440. 44440, and that will take you through there. So both levels, both parts of the double top should run that in the same way over as we did for here. That brings a little bit of conservatism into it all, but that is your rejection. Sometimes I've been known to take the full move from the least high one, so I put the lock on here. You can creep a little bit higher for your amplitude because inherently we've got some conservatism already in there, and we know what time frame that is. I want to just fix that I'm not in log scale there. Go back to regular, grab that and drag it down. So this is also suggesting we have further downside to go on the Ethereum, and we have a little bit more, a bonus for you on the inverted HVF. If it triggers, you just touched and broke it there, so that would be our target from the double top, not yet made. You reverse to that neckline, as I say, twice, and you've been in this holding pattern. You just triggered and now rallying back in right now, but I'm not sure that's going to stay that way much longer. The larger target, 2911, the secondary interim level target where you might rally is at the 3042. Isn't that interesting that it dovetails with the making of the target of the double bottom? So if and when you get here, note it's if and when, you're likely to get some rally before you get the gift of your final target. You may actually get that overperformance. Who knows? We can't tell you how big a crisis it might turn out for crypto, and or whether the traditional markets will play a role in that. That will be determined by the markets themselves. That doesn't mean, again, that we don't expect crypto to make sometime during 2025 a higher high than all of these highs you see here. Just because we are telling you on this time frame there is bearish structure does not mean we are saying all of crypto is dying and is a short to zero. There seems to be sometimes a lack of multiple time frame analysis understanding in the comment section. I know the smartest and the bravest and the brightest don't always tend to be the ones commenting. I'd prefer you were. Because there seems to be a lot of miscomprehension with those that put the first comments in. We do appreciate you commenting, especially for the algorithm and the support. Okay, so we've given you a downside target of 2,911 for Ethereum with potential to overperform. What happens on a first inverted HVF? I'm going to give you a free piece of theory. The first one in a downtrend does overperform. So the double top has its targets. Reversals can, by general rule, overperform, but their targets, at least you tend to get some degree of rally. So rally and then go down. Maybe we're spilling so fast we run through the second interim, the target for the double top and our HVF target, and get a bigger rally before further downside could occur, or it's the end of the story. That I can't answer you. We will see closer to the time in terms of what the key drivers are. Let's finish with the third chart I promised you. The third chart I promised you is one that we did exceedingly well out of to the upside, and now we're saying hold on, maybe you're in a downside now. Again, it doesn't mean it has to make this target, but you've got to remember that this came from 60 cents. It's done really well. In fact, it traded as low as in the 40s. Nice big move up here, nice big move all the way up to 2.9, virtually $3. The key levels of significance that we have identified that run through this whole continuation pattern is the $2, surprise, surprise, key round number, and the $2.50. If you look at that volume by price, most of the 70% of this structure that I've drawn, you'll see that the bulk of the volume here is in this range. It's very small above, and it's very small below. But if this turns out a reversal, we might start stacking those horizontal histos on the lower side. So this is a potential downside after being a possible upside. We had to wait and see. What was it going to be? You know, what's happening? There's a descending triangle against this. It's been very flat. This spike of volume had more to do. Let's actually show you. This is kind of useful. This spike of volume had more to do with the complexity in and around here. That fact that you've got so much volume up top here is the interplay with the $2.50 and the support here in and around the 230. You can see it there. Lots of long wicks there, lots of long wicks there, lots of support there, keeping the price bouncing there, and you had the exact same there, all just under the 250. So you didn't have a lot of hang time above 250. Despite trading 290, you didn't have a lot of hang time above 250. There's your iceberg number one. You made the 290. He looks like that. There's a very small spell there, and there, where once again you're above 250. The rest is only wicks, apart from that little iceberg over there. Most of the bulk of the price behavior is sub the 250 line. So that represents localized resistance that is rarely run, apart from the most explosive moment when you're in bull markets and a wee rally after the first pullback. And again, after a compression structure that was building a lot of histo volume, you got enough of a squeeze just to grab some airtime above that. And then on the low side, most of everything was above the $2. You had literally a wick, and two candles not lasting more than a tick and a jiff below that. This entire structure is based off of the two key levels of significance. That is $2 and $2.50. Overall, if Bitcoin turns into a bear market, we would expect the $2 to fall. And we have drawn an inverted HVF that will give you the view of, if that were to happen, there is a possibility on balance of possibilities. Some things are possibilities, some things are probabilities. How strong a possibility will determine whether it's a probability, but probabilities can still only be 0%. So in terms of English, they can be 0.1%. It's still not very highly likely. So if I use the word probability, that doesn't mean it's got a guarantee. That points to 1.413. People have to remember, it's still a great number when you were at 49 cents before, $1.41. It's just not as great as 2.9, which is twice the value. 2.9. You all would have loved to have sold that top. Forget about doing it. The key fact is you're getting two key levels here, and it looks like we are tapping on the two. Will it support? Well, this is a current candle, and Bitcoin is looking soft. It could have a rally now. It wasn't the biggest fall, and it could say, that's all we're going to do. There is no more to this head and shoulder, and we're going to blast up. Michael Saylor's back. He's mortgaged his company, Apple, Tesla, and everybody else, and most of the dark states, and they're now going to be buying only Bitcoin, and they're going to buy 3 trillion a day. Well, then in that case, Bitcoin turns. I can't tell you how it's going to pan out, but I would say I would be cautious, and I'm happy to be in stable coins from higher up at the 220s level over this point, because we're already down at 201, and we have a possibility of letting go of the $2 as support on XRP. If it falls and you have a spill, we have an interim level. That's courtesy of HVF method 1.81. Grab the mini course to find out more about HVF method and the value of interim targets, why it's time to play golf and not to watch, because you're going to expect some adverse price behavior. If you were short, you probably get some form of a rally here. It could come all the way back to the $2 before getting rejected really hard and running the target, or it could just fail. Patterns fail. It does happen. It just means a higher possibility or probability. There you go. In this video, we've given you a possible downside of 141. We also remind you that this is the first in a new trend. So we apply overperformance rules. Were we to be short, I'm not short XRP, we could actually hold for beyond that target. On what basis do we do that? How do we do overperformance slides and trumpets? That's in our theory that you can learn about when you book a call and become part of our community. These have all triggered. XRP has triggered on a downside inverted HVF. Ethereum has just about triggered on a downside inverted HVF by a whisker. It had actually been fairly strong just before, and Bitcoin itself has clearly triggered on a number of patterns. Is this the hugest spill so far? No, it's a start. It could gain momentum and go all the way to target, or that could be its best momentum and it can carry on and fail. At what point is the head and shoulder failure, some of you would ask? I would already start to feel concerned when this little flag fails. That's that one there. I would certainly feel concerned when you surpass the fractal, and this is the ultimate should be all out. If you were to do that, I don't tend to allow losses that large. This would be typical of my risk reward here on this particular draw that I've shown you. That would be a fail of the full head and shoulder. Bear in mind, this small flag can fail, and you can rally back and go one more time to the high side of this flag all the way up here, and that could mean you think the head and shoulders fail, and the flag just extends. You get a new high over there, and then it comes crashing down to the base here, and then does the same thing again, very low along the flag, and spills later. That would be a pattern extension. That would be a flag extension. It would be a head and shoulder extension, and we'd go back and we'd consider shorts again. That's why I cut and run early if the first pattern fails, because there's lots of levels and lots of things, localized highs that could be taken out and still mean the head and shoulder still holds, the flag still holds. So bear this in mind. You could think we're wrong, and we're not yet wrong. It's just taking longer and it's a bigger time frame. But right now, as long as that 93 has happened, that is a triggering event. Also, when key levels trigger, they often have a habit of return moves. If you wail in near the low, you could eat this rally and then watch it spill. You get flushed out, and it ends up doing everything we might have suggested it could do as a result of chasing in at the wrong time. This is why entries matter, risk reward matters, knowing what you're going to do before it happens matters, and that's why having a trading system and methodology puts you in a far stronger position than just blindly following even someone with good method on YouTube, because you're late to the trade, the risk reward dynamics have changed, you may just be getting in time to catch the reaction. Till next time, I look forward to talking to you more. Likes and shares appreciated. Have a marvelous new year.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.